There's a certain pressure in today's market that didn't exist in quite the same way years ago. Everything moves faster. Information hits harder. Opinions are louder. And if you're not careful, you can start to feel like standing still is the same thing as falling behind. Frank Cardia has watched that shift happen in real time. After nearly 3 decades in the financial services industry, working across equities, private equity, and long-term asset management, he's seen what happens when decisions are driven by urgency instead of discipline. It rarely ends well. The irony is, the more noise there is, the more valuable patience becomes. Not passive patience, but the kind that's rooted in experience. The kind that allows you to pause, think things through, and move forward with intention instead of reaction. For Frank, that mindset didn't show up overnight. It came from years of being in the trenches, sitting across from clients, and living through market cycles that tested both confidence and conviction. If there's one thing that stayed consistent, it's this: you don't build anything meaningful by rushing it. Spend a little time around Frank and one thing stands out right away. He doesn't believe in half conversations. There's no version of a deal where the uncomfortable parts get brushed aside or softened just to keep things moving. His view is pretty straightforward. If a client is going to move forward, they should understand exactly what they're getting into. No surprises later. He often talks about eliminating misunderstandings entirely. That might sound simple, but in practice it takes discipline. It means being willing to slow things down, explain details more than once, and sometimes say things that aren't easy to hear. Not every client loves that in the moment. That's just reality. But over time, it's what builds trust. People don't just want results. They want to feel like they're making informed decisions. They want to know someone is looking out for them, not just pushing something across the finish line. Frank has stuck with that approach even when it's cost him deals. Because the alternative, closing something that isn't fully understood, usually costs a lot more in the long run. Earlier in his career, Frank leaned more into the idea of big wins. The kind that could move the needle quickly. The kind that felt like momentum. That mindset isn't unusual, especially when you're building something early on. You want to prove yourself. You want results. And if there's an opportunity to take a bigger swing, it's hard not to consider it. Over time, that changes. Some of it comes from experience. Some of it comes from seeing how different market environments play out. But a big part of it comes from watching your clients evolve. As they get older, their priorities shift. It becomes less about hitting the next big win and more about protecting what they've already built. Stability starts to matter more than excitement. These days, he talks more about consistency than anything else. Not chasing home runs, but stacking smaller, smarter wins over time. Doubles and triples that actually hold up. That doesn't mean avoiding opportunity. It means being more selective about what qualifies as one. There's a discipline in saying no to things that look good on the surface but don't hold up when you really dig in. And that discipline is where a lot of long-term success actually comes from. One of the biggest shifts in Frank's approach is how he evaluates risk. There was a time when a strong story could carry weight. A company with momentum, a compelling pitch, something that felt like it was heading in the right direction. That still matters, but it's no longer enough. Now, the process is deeper. Slower. He spends more time going through data rooms, looking at how a business actually operates, not just how it presents itself. He asks more direct questions. Not just about upside, but about what could go wrong and how leadership plans to deal with it. And maybe most importantly, he's more comfortable waiting. That's not always easy. Waiting can feel like you're missing something. Like everyone else is moving and you're not. But time has a way of revealing things that initial excitement hides. A company that looks great on day one might show cracks a few months later. Or it might prove itself in ways that make the opportunity even stronger. Either way, patience gives you a clearer picture. For Frank, managing risk isn't just part of the process anymore. It's the foundation of it. Outside of finance, Frank has spent over 2 decades pushing himself through endurance training. Ironman races, marathons, long bike rides that most people wouldn't even consider attempting. At first, it might seem unrelated. But the connection is actually pretty direct. Endurance training teaches you how to deal with discomfort. Not just for a few minutes, but for hours. It teaches you how to keep going when your body is telling you to stop. It forces you to manage your pace, your mindset, and your expectations all at once. That carries over into business more than people think. Investing, especially long-term investing, isn't always comfortable. There are stretches where nothing seems to be happening. Times when things don't go according to plan. Moments where the easiest move is to change direction just to feel like you're doing something. That's where discipline shows up. Frank has always believed that hard work can close the gap where talent falls short. Not because talent doesn't matter, but because consistency tends to win over time. It's not about one great effort. It's about showing up again the next day, and the day after that, and doing the work even when it's not exciting. Even with a mindset built around consistency, Frank isn't ignoring what's coming next. He's paying attention to how AI is starting to influence finance. There's no question it's going to change parts of the industry. Faster analysis, better access to information, more efficient systems. But he doesn't see it replacing the core of what he does. At the end of the day, decisions still come down to judgment. Experience. The ability to look at something and know when it doesn't quite add up, even if the numbers look fine on paper. Those are things that don't come from technology alone.